All right, now it's time for Evan's Pro Picks. All right, let's get into Pro Picks with Evan Mancer of Cardinal Capital Management. And this segment is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer. It offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, Evan, let's get into it. Your first one is a railway, Canadian Pacific, Kansas City. And I'll admit, I've been looking at these rails too because they just seem like they are struggling, this in addition to CN Rail. Why do you feel comfortable going into these rails now? You know, we can be confident as we want about trade war prospects, but it's still a headwind.
Yeah, this is our don't worry about the tariffs pick. But CP, I think, also a lot of the things that people worry about if there is, a recession or a downturn, what can go wrong in the long term of the business, I think it scores really well there. We're going to need rails, and they are the best managed rail in the industry in North America. On the tariffs, we've talked about why we are looking through it. They obviously have exposure to Mexico. They bought Kansas City Southern. Maybe they've got the biggest exposure to Mexico of the rails and cross-border trade. But if you look at the tariff issue as a whole and you say that, okay, this is going to extend beyond North America, Canada and Mexico to China, I mean, if there's bigger tariffs put on China and yet goods still have to flow, that might offset the tariffs in Mexico. And then also keep in mind that CP is not producing the goods. They're just transporting them. And our thought is that volumes probably aren't going to take a huge hit. If you're a farmer wanting to buy potash from Saskatchewan and it's coming from CP, you may end up paying more for it if there's a tariff. Are you going to put less on your field? I'm not sure that you will. So we like it for that. And then again, just the top management. If you look at their targets, they're looking to more than double earnings in 5 years. So I think you got excellent growth. You've got pretty good defensive characteristics for what investors normally look at, and it's a rail. So you're probably good in the long term.
So I like this. Don't worry about the tariffs pick. It is CP Rail. But if we think about what the end game is, maybe it's not as severe, the tariff war, maybe it's not the tariffs themselves, but ultimately it is to increase activity just within the United States. So is that a recipe for success for a railway that spans 3 countries across North America and relies on that trade?
Yeah, that's the goal of the tariffs, right? But I think we still get past I don't think, our view is we're not going to have a situation where we've got tariffs in place 5 years from now. I think we do get to some agreement. And then I think my point I was trying to make before is that a lot of what they're transporting is still necessary for growth in the U.S. So, because a lot of what's transported on rails is commodities, and that's what the U.S. is short of, really. So, to keep it really simple, I think they need what CP is transporting.
Your second pick is Applied Materials. This one took a hit recently because it is dealing with restrictions on what it can sell to China. This is the company that makes the thing so the semiconductors can make the semiconductors. Is that right?
Yes. So there's if you look at, let's say NVIDIA as our example, that's what everyone looks at right now in semiconductors. They design semiconductors. They don't make semiconductors. A company like Taiwan Semiconductor, they're the biggest. They've got these big fabrication plants that's where you've got the people in astronaut suits walking around and making these chips. How do they make the chips? Well, the equipment for making these chips comes from companies like Applied Materials. And there's maybe 4 big ones that control that industry in the world. And within their specialties, they've got 50 to 90% share. So it's, again, a really protected industry. So this is kind of our AI pick. If we had a tariff pick, this will be the AI pick. And with Applied Materials,
at 18 times earnings, it's hard to find an 18 times earnings
you
AI pick.
You beat me to it. That's why, as a value investor, we do believe that this AI is going to be if you look at how much money is being invested, I think we're over $1 trillion of committed spending now for this year. And so how do you benefit from that without paying the 40, 50 times earnings that a lot of the big name companies are trading at? And we looked at Applied Materials. You're right. One thing people are worried about is China slowed. There was a pull forward to get ahead of the tariffs, and now that's come off a little bit. They historically always trade cheap because it's been so cyclical. But that was the old days where you worried, the memory chips are going to fall, or the PC cycle's turning, and then Applied Materials gets hit. We think they're way more resilient now. They're a leading edge with AI, and they got a big services business now that they didn't used to have. That's a third of the business and way more stable. So we like it. We think it should trade higher than 18 times earnings.
Your third pick is United Rentals. So you've got to don't worry about the tariffs, don't worry about AI. Invest in AI through Applied Materials. What is United Rentals?
This is if you don't want AI, but you want a company that grows even faster and is still cheap, then that's United Rentals. So amazingly, over these past 10 years, they've been growing earnings at over 20% a year consistently. They're one of the fastest growing companies around. And what are they? They do they rent all the equipment out for construction sites and all the buildings, which is just sort of a broad swath of building. I think the Inflation Reduction Act, with all that spending there on building, should be ultimately helpful for them. Building out these data centers will be helpful. New construction.
Isn't there concern, though, about the Inflation Reduction Act? There's so much uncertainty about, how much is Trump going to modify that, or are those checks actually going to clear and come through?
Yeah, and I think that's actually weighed on the stock a little bit lately, and that we're waiting to see it. I think it'll still do well because it grows along with that spending. But also the other piece is historically they're another one of the companies that's done an amazing job on acquisitions. So they just bought one of their biggest competitors recently, H&E. That should add to this year's growth.
And it's an acquisition you like because you're not a big acquisition guy.
No, but I think it's a very scalable business. So if you think of a construction site and what are they renting out? Like a Bobcat or a back-end loader? Like they've got all that equipment you'd think of. But then there's other things you need at the site, like a porta potty or a fence around the construction site or all sorts of things. And so they'll make these other acquisitions in kind of adjacent competitors that offer these other services or other equipment rentals, with the idea being that the more that they can be a one-stop shop to all their clients, then just the more business they're going to take, which has been sort of the case with that company. So I think excellent management, really scalable business, and that history of growth, even if it slows down a bit, it's still not an expensive stock. I think it's, maybe 15, 16 times earnings.
All right. I love these picks. They're not the Mag 7. They're not the ones that are on the front page of the newspaper, and that's often where you can make the most money. So thank you so much.
Yes, thank you.